I think we briefly talked about payments already on the infra panel when we talked about like banks, settlement, clearance. There are a lot of problems. It takes forever. Banks take big cuts of it. So happy to welcome all the speakers, and think it would be great if we start with a brief introduction about yourself, about the company. Let's start from here.
I start. Hi everybody, my name is Dennis. I'm part of the business development team here in Europe for Circle. For those of you who are not familiar with Circle, a bit closer please.
Yeah.
Closer? All right. Can you hear me? Perfect. All right. For those of you who are not familiar with Circle, we are building a global stablecoin network with USDC and EURC. Goal here is to build efficient money flows and allow businesses to exchange value.
Perfect. Hi, thank you for having me here today. I'm Aliya Gupta. I lead business development and product innovation at Sygnum Bank. So I don't know if all of you here maybe know Sygnum or have heard of us before, but we're the world's first digital asset bank. So we work with pretty much every DAO, treasury fund, and so on that is not based in America. So if you look on CoinGecko, the top 100 projects listed, we work with maybe 70% of them, supporting them with access to traditional financial services, and as well providing Web3 access to a lot of people who want to enter the space through a regulated doorway.
And Madgalena, nice to meet you. I focus mostly on commercial and legal at Gelato, and happy to be here.
Great. My name is Assia Gardiner. I am an associate director at Boston Consulting Group here in Zurich. BCG is a global strategy consulting firm, and over the last 12 years I've worked both with traditional financial institutions and payment companies, and then more recently with Web3 and digital asset firms, focusing on two key topics. One is strategy, of course, and the other one is risk and regulatory compliance, which is a very relevant topic for us for our discussion today.
Hey, if you weren't here this morning already, I'm Luis. I'm one of the founders of Gelato. I was talking this morning about blockchains and whatnot, and now I'm talking about payments with the lovely folks here. Actually, we have worked with Circle quite a bunch as well. I know the team from Sygnum already. Very nice to meet you as well. Yeah, let's kick it off.
Let's kick it off. If you have any questions, I like this interactive question asking before, so feel free to ask questions in between. Other than that, I think it would be great if we could start with like some examples. I know all of your firms have worked on crypto, on Web3 projects. Before Circle, for example, you work with a lot of traditional companies like MoneyGram, Visa, BlackRock. Sygnum has worked with Matter Labs to tokenize their treasury. BCG has a lot of projects from bringing more transparency from the diamond mining to market business to the UN World Food Program. And also Gelato has some very interesting use cases. So I'll be curious to learn more, and maybe you could give us an example of what you're doing in the space.
Let's start.
I need to really fit this answer into 2 minutes. I think that, of course, for us, this is a very new sector, just like for everyone. And the sign that we're working with it, as well as other consulting firms, is a sign that the market is maturing, which is very good news for everyone, right? We're gaining scale. The work that we do is really extremely diversified because we are present US and Asia Pacific and in Europe. But I think if I think about the trends that I'm seeing lately, then first of all, it's everything to do with scale up of any firms in Web3 space. That's a very big one. The second one is anything that has to do with solutions for risk management and compliance. Again, as the sector is professionalizing, I think it's very clear that when companies want to work with the likes of BlackRock or traditional financial institutions, they need to show that they have very robust risk management frameworks in place. And the third one would be, I would call it more interesting, innovative cases for digital assets. So tokenization is one. We recently did quite an interesting public case in Dubai with the shipping assets doing tokenization. That was quite good. And just a lot of ideas that are floating around, and we help people bring them to the market and make them big.
Should I continue? All right. What I can give you is a little bit a rundown of different use cases that we have been actually doing and also have been doing here in Switzerland specifically. So if you think about it, it clearly started with payments for trading, right? So when you were buying or selling crypto assets, we were doing this very often with stablecoins. And if you zoom out a bit, nowadays, what you can also see as a use case here is clearly For example, looking at countries like Turkey, businesses and people actually use stablecoins as a store of value, right? For them, that's very important to have easy access to these kinds of currencies. If you contrast Turkey with Switzerland over here, for the people locally, I'm sure you're aware that there is 6 payment services now worldwide. What these guys have done, they have actually integrated crypto payments, stablecoins natively in all of their product offerings to the market, which is amazing, right? These guys have 90% market share in Switzerland. They're ready to roll this out. Also, if you think about the just classical cities here like Lugano, they have actually embraced crypto payments completely. If you think about cantons like the canton of Zug, people can now pay their taxes in cryptocurrencies. Imagine that. Would you have thought about that? I think that's pretty amazing to see how this is evolving. And if I think about it from a business perspective, what's actually happening is remittance payments, right? You see corridors like from Europe to Turkey or North America to Latin America. Actually, crypto payments play a huge role already nowadays. I think a big sector that will be emerging in the future is the B2B or the B2B cross-border space. SAP has just recently announced the Digital Currency Hub. What they're doing is they are enabling their clients to transact value via USDC on Ethereum. And that's just the start. And if you think about what that means for the industry, you basically cut out the traditional financial players. And I think what we will see is actually a run-up, how we can actually merge these two worlds together in a useful way, which I think is actually helpful and which will help us onboard the next billion people to crypto payments in a very natural way. Yeah, one last idea maybe, if I think about payments, what the technology can bring is actually with smart contracts. What I would expect to see is actually automated payments, subscription payments, the streaming of payments for use cases, which will emerge over the next couple of years. We will burst.
Sure. So as you talked about blending of the traditional and the Web3 worlds, that's a little bit where Sygnum sits in the general ecosystem, and also what I have the pleasure of working on as well in my day-to-day job. So on one side, it's kind of just being able to use traditional core banking setups to book digital assets. Now, this is like one piece of the puzzle that is, you would think quite straightforward, but it's not, and it's something that we've had to work quite hard on to create a simple booking system that enables us to reflect digital assets in a similar way as traditional assets on-chain, off-chain. But more than that, it's kind of building the next steps, building the future of finance, right? So one example that you referred to before was about tokenization, and we've built our tokenization stack, an issuance platform, as well as a secondary market where you can buy and sell the tokens that are issued. And in this, one of the examples that, again, you referred to before was with ZK Sync. So they wanted to they had a very successful fundraise a couple of years ago. They want to take advantage of the nice interest rate environments that we're in. And so they wanted to deploy some of their capital into a money market fund with Fidelity, a massive player in the space. And so through Sygnum, what we were able to do was to create a claim on this fund that would then be represented on-chain on ZK Sync. So what this means is that the TLV still stayed on ZK Sync. They didn't kind of release those funds, but also we could create that kind of flexibility that crypto players can kind of access traditional assets when the market serves them, and then also create those doorways so that when crypto assets have better, more interesting offerings, the assets can also flow back. And sitting in the sort of middle of this broader ecosystem, Sygnum is constantly working and innovating to create these doorways, to keep them open to enable this flow of assets.
Cool. And maybe let me tell you a little story about how we actually founded Gelato. And when we founded Gelato, we were both still in our early 20s. So as someone in your early 20s, you don't really know what it feels like to transfer $2 million across global borders, right? Like that's not like a common experience that you have. But when we were fundraising for the first time as a crypto startup, and especially during COVID, you're just online and you meet people online, and your investors are like people in a Telegram chat, and they then want to transfer you $1 million, right? And I think I took it for granted how well it worked, and we actually received our funding in USDC on a Sunday. You know, like I was like talking to some guy in Singapore, one of our main investors, super cool guy. Shout out to IOSG. And basically, I was writing with him on a Sunday morning, and he basically told me, yeah, I can transfer the money now. And then it was there like in 20 seconds, $2 million on our bank account, that bank account being an Ethereum address, right, an Ethereum account. And I was like, yeah, that's cool. And only later on I realized that this is not normal in the current world, that this is like anyone in the payments or Forex or banking industry would be like, what, would this work? This took 12 seconds and cost $1? Well, that's pretty crazy. Permissionless as well. Of course, there's problems with that, but if you are actually not a criminal, then it's pretty awesome. So that was pretty cool. And also in general, as a crypto startup, you're constantly being discriminated by banks and like even harassed at some point. Like we had one of our fintech accounts frozen just for dropping the word Ethereum on a call. So actually what we were able to do here in Switzerland, going back to Switzerland being one of the crypto-friendly forward countries, you in order to found a company here, you have to put in something called I guess share capital is the English word, is like the initial capital, right? Like for a GmbH, 20,000 francs, and that is a basic right, like in a democracy, right? You'd think that anyone can found a company, but actually it turns out that you need this sort of initial share capital. And then it turns out that the banks actually have a chokehold on you, because in order to put the capital somewhere, you need to have a bank account. But banks are actually pretty private, right? Like so we weren't able to get a bank account, at least not quickly, because they didn't want to give us one because we were doing something with crypto back then, right? So suddenly we weren't able to found a company, right? So actually that's a problem, right? And what we were able to do in Switzerland was we actually paid our share capital in USDC through the same process that they use for when you want to found a trucking company and you put up your truck as share capital, right? Like that's possible. You don't actually need to have cash. You can have a truck and say that truck is now the sort of, I guess, the collateral of the company founding or whatnot. So we did that with USDC. So we worked with a revisionary or whatever they're called, and they basically assessed the USDC as if they were a truck. And they said, this is worth roughly 20,000 francs, so you're good to go. And we were able to register the company. And then I got a letter here in Zug, where I live and where the company is at. And it was a typical company registration letter. And then on the letter, in very small fine print, it was asking for the company registration fee of 736 francs or something. And then they said in Zug that you can also pay this in Bitcoin and Ether. So just for shits and giggles, I did that, and like I emailed someone at the registration office, and they sent me an email link, and then I was able to pay the registration fee in ETH. So this is all like on the public record. If you look up Gelato Digital GmbH online, you will see that the share capital is paid in 20k USDC. You probably don't see that we paid the registration fee in ETH, but that happened, and that's pretty cool. But yeah, I think stablecoins are just such an amazing invention, which is weird because like they came later, right? Like people thought initially Bitcoin would be used for payments, right? And to this day, it's not really the case. Even though in Lugano you can now pay for your Big Mac with Bitcoin, apparently. So, but who does that, right? Like, why is it useful? It's fun. But yeah, so ultimately, like stablecoins were like an immune reaction of blockchain networks to being shut off from the banking system in the early days, and centralized exchanges and so on. Basically, not when the bear market came and stuff wasn't sort of settled in Bitcoin anymore because Bitcoin was dumping and so on. Like at some point, they sort of invented a stablecoin to then have centralized exchange operate on stablecoins and not be so controlled by or actually held back by the banking system, right? And that's an interesting thing. And nowadays, it's so obvious how stablecoins are not just digital cash, what Bitcoin wanted to be, but they're like global payment networks, global settlement networks, and so on. And it was very interesting as an entrepreneur to basically be stablecoin native from day one. We also had the other side of it when the DPEG was there of USDC, right? Like the Silicon Valley Bank went bust and so on. There was the other side of it as well, like the crazy part. But yeah, that's just one story here about how revolutionary this technology is and how revolutionary stablecoins and crypto payments are. Still, like many people say that if all else fails in crypto, just payments alone will be a big enough use case for this industry to be massive. And I didn't appreciate that as an early 20-year-old because I'd never really used the other part of the world. But now that I slowly learn about the TradFi world, I see how revolutionary that actually is.
Well, can I actually just adding on exactly TradFi world. So just to emphasize how hugely important this 20K story is. Right now, if you want to do a business-to-business cross-border payment, it takes you still 2 to 5 days to settle, and it would cost you anywhere up to 4.5%, right? 450 basis points average. So yes, it's a great business case.
We also managed to get a bank account in the meantime, so we're all good. But yeah, which brings me to my. I think you had a question. Do you want to ask it right now?
Sure. So speak stable coins, they perplex me still because it's USDC, but people don't trust USD, or some people may not trust USD. So I wonder, what do you see being the future of stable coins? Should it be pegged to a particular national currency? Should it be pegged something different? Where's the longevity in that, especially for people that have lost trust in national currencies?
I think the benefit of a stable coin is the fact of being stable, right? That's it. If you don't value this, you can basically go to any other crypto asset. But for an economy, the stable coin has value in the fact that you can actually, like Lewis was saying, right? You can transfer it within milliseconds at almost zero fees, and that 24/7, 365, right? There are no bank holidays, there are no cutoff times. You can just transfer this peer-to-peer, no bank involved. I think what Aliya didn't say is that when you actually do this transfer from Switzerland to the US, you probably have correspondent banks involved. And in the end, I think what stablecoins can bring to the equation here is it's not perfect, but it brings a lot of efficiency, right? And think about what it does to an economy when you actually have, let's say, cash flow management, liquidity management instantly versus 3 to 5 days at the cost you were mentioning, right? I think this is actually where we see the benefit going forward. Is this the best solution yet? No, but I think it's a very reasonable combination of TradFi with crypto. And just to give it also more credibility, I think what you also see in the space is a lot of focus on regulation to actually get institutional players involved to make it scale. Because this is in the end what it is, right? We need to make it more efficient on a global level, and for that you need regulation as well. I hope that answers your question.
And sorry, maybe just to build on what you were saying before, I heard this last week and I thought it was a really nice way to think about how massive blockchain is in specifically the payment space, right? So going back 20, 30 years or whatever, what email did to post is what Spotify did to music, is what blockchain will do for payments. And I just love that statement because it kind of shows the scale of what we can't see right now. It feels like we're still, not quite there, but it is very much the same level of transformation we're going to be seeing in the space.
Sorry. The one child of us paid us from America. So it's from America here, when times that in first study test, he paid us for first took 3 days. Until my bank accepted this, and it took a head of fees what I had to pay. On Sunday, he said, can I pay you as a people could go? He used to see or Congress, the settlement within under 5 minutes, everything not used to transactions, anything immediately, it's amazing. What I'm taking, and that's actually, and what's the future of the bank, what the role of the bank in the future? I want this image system and if we want this and a one-to-one thing to the squad. So be user ready because they're not joining because they almost they were you which I guess I'm waiting for this. Maybe a question was so
I think that one's directed a little bit at us. So at Sygnum we very firmly believe that the future has heritage. In the crypto world we're a lot of quite liberal thinkers who have this vision of this idealistic future where, banks don't necessarily do anything at all. But we believe that there's a journey there. And along that journey, it's very important to take everyone with us. And so crypto tends to rage ahead and break things, move fast. It's fantastic. It's why we see the kind of innovation that we do see, right? But when you want governments to come along, when you want larger institutions to come along, it is you do have to kind of invite along all these people on the journey. And that is the role Sygnum seeks to play in this ecosystem. The banks that are still, closing their eyes and pretending that blockchain doesn't exist, I think there are not so many anymore. I think most of them are starting to accept that they need to do something in the space. Even now, you still hear a little bit of Bitcoin bad, blockchain good. But with the legalization, or with the ETFs now coming out in America, I think that's also changing. So the banks are going to join the movement. They have to, if they don't want to be left behind. But the role that they will play, I think, will evolve. And I can give maybe one example of that. One is I talked about the tokenization thing that we're doing, that we've been doing for a long time. But in the coming days, actually, Sygnum is about to launch a institutional grade recovery solution. So essentially, one of the big problems in crypto is that if you lose your keys, your stuff is just done, right? There's no way to get your assets back. But with multi-sig setups, with smart account setups, you can actually create that level of modularity where you can create a admin setup that still doesn't have any access to your funds, still doesn't see your seed phrase or your passwords or anything like this, but that you can call in the case of a disaster. Because a plane can crash, your phone can get stolen, these things do happen. And personally, I don't want to be responsible for my entire portfolio. I don't trust myself, and I know that if I die tomorrow, my husband will not be able to access my portfolio. So we do need these sorts of safeguards, even in the crypto world. And especially as the industry is maturing, I think more and more people start to feel a little bit more anxious about having their, key pass seed phrase written on a piece of paper inside a vault in a fireproof safe. No. There's always going to be gaps in OPSEC when it's human controlled. And so that's where also I think banks have a nice, exciting role to play.
Yes, I want to add something. These models are going to be very hybrid. Right now, here in Switzerland is the country with the highest number of banks active in crypto. For example, we have 3 cantonal banks that have Fichtl. I have an interview with one of them yesterday. So the bank, we will see a lot of blends. The ecosystem will never be 100% pure, okay, just this side and the other side. No, there will be a lot of intersections, Sygnum is doing a fantastic work. One thing is as in the previous panel was mentioned, the demand is it comes from the people. So many banks here in Switzerland have been pushed by the public. For example, PostFinance has an offering, a crypto offering, because their customer, they say, we want a crypto offering. And we need to understand that like you example, Luis and you are very well versed in this ecosystem. But we have regular mass or new surveys, and for them it is very beneficial, to have the bank involved. This is one thing, and there is another factor. Switzerland is leading in wealth management for crypto and in crypto. Switzerland in wealth management traditional is number 1. But it turns out that there is many founders from blockchain-related companies that have a lot of wealth, and crypto is, up and down. And they say, okay, can we have a piece of our wealth in a traditional portfolio? So it is safe. So they record to your services. And in the other hand, we have the very wealthy individual. If you have 10 million, you will go to a bank and tell them, listen, can you make a portfolio something traditional, and I want some crypto. So we will see a lot of this mess, and the bank will not disappear, but we will see more and more synergies, so that we will make it fast.
Let me just add very quickly market perspective, echoing both of the questions here. I think if we look overall at the payments market, it's basically a very attractive market, right? It's growing 6 to 8%. It looks good. Then if you look at the largest payment companies, they're losing total shareholder value. They're bleeding it out up to 20%, right? Something must be done. At the same time, you see emergence of payment-focused fintechs. They're now around 5,000 around the world. And we just discussed that there is a very concrete problem, which is particularly with cross-border payment, the cost issue and the speed issue, right? So that basically means that the existing players, existing institutions have no choice but to adapt. And then one particular look at the corner of the payments market, which is crypto payments, they're now accounting for less than 1% because their main use case is still investment rather than payments, right? So obviously 99% of the market, will not switch this 1% tomorrow. But echoing this, I really love all the Sygnum logo, Future as a heritage. It's also about convergence and it's about alternatives, right, rather than replacement.
I would like to add one thing to this, and I guess that's up to us as an industry, right? In the end, I think our task is to make the interaction with the crypto world, with the stablecoins, easy and convenient. And if we manage this, then in the end, this complexity is abstracted away, and it's much easier to actually integrate into the normal, routines of people. And I do see a lot of trends from the technological side, paymaster, account abstractions, all of this actually helps in achieving this. But I think we're still long ways out to actually go all the way to make it convenient for people to use USDC and other stable coins as well.
Yeah, maybe one follow-up question to you, what you just said. I think with all this innovation going on in the payment sector, what concrete steps do you see financial institutions take to counteract?
There's always two motivations for financial institutions to do something. I call it the carrot and the stick, right? The carrot is that, okay, you can make new money. So post-finance is a very good example, right? And another way is stick, meaning if you don't do it, you're going to lose your customers, you're going to lose your money. And between these two, it's still more carrot now, because obviously we don't see customers flying away from the banks, but we definitely see that institutions are actively integrating the new options and new products in the space to their existing product range. And Switzerland definitely is one of the most interesting countries. India and Brazil also, but Switzerland is at the forefront.
Yep, thanks. Talking about Brazil, I think I would be interested, and maybe the audience would be too, if you could talk about Nubank and what you've done with them in Brazil.
Yeah, Nubank is actually a client of Circle since last year. It's a new bank comparable to Ubank over here or Neon Bank in Switzerland, N26 for the German colleagues in the room. What they've done is they've done a completely different approach to crypto, right? They've integrated a crypto product, but in the end, what they wanted to achieve is abstract the complexity away. And we have not to underestimate the size of this, right? They alone have 100 million clients in LATAM. And what they said is, we don't want USDC. What we want is a digital dollar, right? And they did a lot of testing, and they found out that if you just say it's a digital dollar, it actually reduces the entry barrier to interact with crypto tremendously. And if you think about this, if you integrate this into your product portfolio as a natural way of sending, spending, holding US dollars, this is a great example for us as an industry to keep in mind when building products.
Thank you. Maybe switching gears a little, talking about compliance and regulatory changes. I think a lot of people know that MiCA is coming into effect, and maybe question to you again first, how is Circle and stablecoins in general, how are they dealing with regulatory compliance, and maybe what also differentiates you and Circle USDC from other stablecoins out there?
Yeah, thank you. I guess MiCA coming into force in a couple of days is a big topic for the industry. It's obviously a regulation in Europe, for those of you who are not aware of what MiCA is. Circle has always taken a regulatory first approach, right? Because we believe it is very important to have institutions on your side, enable them to actually touch cryptocurrencies. And that's why you need to have this regulation in place. What Circle is doing, we are actually applying for e-money license in Paris. We will be a digital asset service provider, registered as well, which enables us to actually have the compliance to this MiCA regulation, which will then hopefully enable also a wider adoption of stablecoins in general.
Do you also want to speak? You have licenses, right, in Switzerland and Singapore. How are you dealing with the ever-changing environment?
So we always say Switzerland is a bit of an island, right? Because we're so blessed over here to actually have a regulator who's willing to engage, willing to learn, and then help you innovate, help you bring innovation into this country. So in Switzerland with FINMA, we were very lucky to get our banking license back in 2019. But to be very clear, it was a long educational journey, and this is something that's kind of ever evolving. And especially as you mentioned, we've got Mika coming in, you've got Vara and Dubai, you've got Japan, Hong Kong, in Singapore as well. Things are starting to now slowly move, and all of these different jurisdictions, I think, are slowly starting to come to a point of convergence, and that's a fantastic thing for the industry, because we're starting to then come to a place of maturity where all these different jurisdictions can actually interact and also apply the same level of like regulation and oversight into crypto transactions as you see on the traditional side. So in Singapore, we have a capital market service license. We have a major payments institutional license. In Abu Dhabi, we're licensed with Financial Services Service for, it's a very specific name. We also licensed by the CSSF in Luxembourg. And it's really important as an institution in the space to work with the regulators, and then also for Web3 companies who are seeking to interact beyond just the realm of Web3, right? Because all of us in Web3 are quite very deep in our own silo. We love our space, we believe very deeply in our ideals, but we know that it's also just a very small percentage of the total market. And so needing to engage with regulators, needing to engage with traditional finance is so necessary for growth for the next step going forward.
Maybe what are gonna be the major unlocks that the Mika regulation will bring? Like, what is your bull case for Mika, I guess, and then maybe also what is the bear case?
So as we're talking payments, right, I can tell you we've been engaging with a lot of payment providers online and offline, and in the end, for them, it's very important to see the benefits of the technology. This is undoubted. But think about it, if you're a stock-listed company, for example, you have to go through different committees. There's a risk committee, a compliance committee, you have to go through the board. In the end, if you cannot tick the box of regulatory compliance, you will not proceed. And so if you ask me for the bull case, this is it, right? We basically make it possible for these large players to finally go in, adopt the technology, have better payment processes for their clients, and tick the compliance box, get over this board. That's a big challenge nowadays.
I mean, for us as well, right? So one of the things that Fabiola actually talked about, thanks Fab, is that Sygnum actually provides a tech stack to a lot of other banks, a lot of banks here in Switzerland, particularly right now, where we enable essentially white label services to our, to be able to hold Bitcoin and Ethereum and trade and so on. Outside of Switzerland, we've seen a lot of interest from several banks who are, curious about the space, but they're not yet willing to engage because they're waiting for Mika, and they're waiting to see how Mika will be applied in their jurisdiction. Because Mika is still on a high level, like we see what it says, but how each regulator chooses to interpret and then apply it in their jurisdiction, that is still kind of to be seen. But the bull case is, of course, that it is in a shape that enables all of these other players to also enter the space, because we thrive on competition. We thrive with new players entering the space. And of course, the bear case is that it's not viewed, or they make it even more complicated, or they make even further sort of hoops to jump through beyond Mika itself. But also saying that Mika is kind of like a first step, right? Like we see something for CAS, for crypto asset service providers, but DeFi, the way it treats stable coins, the way it treats real world assets, all of these things are still to be defined. And so it's a first step, but it's a great first step.
Cool, thanks. Maybe another question, because a lot of, more traditional players, they also talk always about CBDCs, like central bank digital currencies. Are we on time?
No, he has a question.
Oh, you have a question. Sorry. Yeah, go first.
Thank you. Well, this somewhat relates to regulation as well. I think it's interesting if we look back at the history of Web3, to that before you were setting with Fichtl, with the launch of Bitcoin,
that payments will be the thing that will onboard the next billion people. If you ask that question in 21, it would have been NFTs. Maybe last year would have been gaming. Maybe it's still gaming. Who knows? And the thing for me that's interesting, we're back to payments. And payments is the one thing that I personally believe will onboard the people. But the problem with payments is it's against everything that crypto is supposed to be. It's not, we have all these things like KYCing, we have privacy that is a big issue within the crypto space, and in payments we don't have that. We have these cases, and that's regulation of like Tornado Cash. I mean, that was technically a Web3 solution for payments. Obviously what's happening now, well, to an extent, what's happening now with the US cracking down on Tornado Cash, we're seeing open source software development being threatened, like an entire industry being threatened that just comes out of payments. And to me, it's interesting of how we can solve these things in Web3. How do we solve the KYC dilemmas? How do we solve these? And I think Web3 has the solutions. I just haven't seen them yet. So maybe you guys have a vision for that.
I think we spoke about zero-knowledge technologies in the panel previously, right? I think even for payments, this is something in the DeFi space where I do see potential. But I guess what we have to differentiate is, payment as I'm buying a goods or a service or a P2P transaction. I think there are different levels of KYC that we will see in the future. My hope is, so I'm a Bitcoiner by heart, right? So I do value privacy. And therefore, I believe that actually we will have the privacy around zero-knowledge technology coming also to payments in the future. But for the time being, to onboard this new group of people, what is actually being looked at is the benefits of the blockchain technology for the payment industry, right? So it is about having faster, cheaper, and more direct transactions. And this is why actually the industry is adopting it. So you have these two worlds colliding. There's us as the users, who will then also benefit from it, but in the end, privacy will have to be restored by new technology going forward.
I think maybe if we look at the other side, the big question always is, what does the regulator want? And I think it's always good to remind ourselves that there are broader regulatory intents that they're coming from, and as was mentioned before, they're still relatively open to discussion. And the broad intents overall would be, first of all, consumer protection, so making sure no one suffers because of TX, because one of the counterparties, if we talk about payments, goes bust, first of all. Second of all, any financial crime protection, so anti-money laundering. And third of all, financial stability, right? That's their kind of fundamental goal. How this is done is exactly still, in many ways, up for discussion. But I think this is kind of the way that we need to start thinking. What is the end goal that they're trying to achieve? And then it's much easier to have those discussions.
Yeah, cool. Thanks for all the input. I think we have a few minutes left, so might want to go to the last question of the panel. So I would be very curious in all your takes on what will it actually really take for the world to switch to digital cryptocurrency transactions, in what form that will be at the end of the day, and get rid of legacy systems that we still have today. Very broad question.
As you heard from my story, we are already there from the point of the founding of Gelato and many other companies in the space. We already live in that future. I think what needs to happen is the infrastructure still has to mature a lot. We had amazing talks this morning from the Celestia founder, Avail. Optimism is speaking later today. Polygon is here. So all of these projects still need to, I think, build better infrastructure, because the scaling limits are still there. Like right now, you wouldn't be able to run the Visa or TPS on these chains, right? Like, but we are getting there. So scalability is, I still think, is a major issue. But ultimately, this is all about technology and technology disrupting existing systems that are heavily maintained by countless humans and middlemen, which who take a big cut and so on. So ultimately, I think this technology just has to be deployed and in the open. Like we are now for the first time seeing Web3 credit card, or non-custodial credit card place. Now there's always a spectrum there. You can always argue about how decentralized it is and whatnot, but I think we actually would have had someone from MasterCard on the panel who unfortunately wasn't able to make it today, but they're doing something with 1inch. Noses Pay is doing something with Visa, right? So I think these things just have to be tried and deployed in the open. And ultimately, someone, by employing this technology, will either make money or will save a lot of costs. And that will, as it always has been, that will be such a strong competitive force that it will become a self-fulfilling prophecy, I believe, at some point. I think people are underestimating how long these things take. I've been in crypto for a very long time, and sometimes I get a bit impatient as well. Are the institutions here, right? I think they are now, right? Like you have Larry Fink tweeting about tokenization and meme coins probably soon as well. But it's just taking longer. It's always taking much longer than you think it does. And I think people are also a bit bored with infrastructure. But the reality is, even though people say, oh, everyone is an infrastructure project, the reality is that we can do so much better still, and we need to do so much better still to actually provide the substrate for applications. So a bit more patience there, and then the first cohort of application developers will leverage the new infrastructure, and they will deploy amazing applications as they do today. But as we know, a lot of crypto applications today are cool, but they don't really scale beyond sort of early adopters into the mainstream. But that's coming. And then once the cat is out of the bag, once the technology is being used, you cannot hide the benefits of it. And I think if you're in crypto and if you know the tech, to your example with Spotify and email and so on, like if you know what it does, if you've actually had this epiphany and you've seen how it compares to the old standard, and again, like the old standard, when you use your centralized apps and so on, they don't use blockchains. They hide the complexity, but someone is paying the cost of that complexity. Someone is like you paying this cost. So yeah, once this cost is removed from the system, whether you see it or not, it will just spread like a virus. And I think it's already begun, right? We're here today in Zurich talking about it, so I think that means something.
Thanks. Trust, I would say, from a completely non-technical point of view. We're in the industry that is viewed as a super high reputational risk industry, right? And any news, negative news in front of Financial Times and so on has a huge effect. And all of the things that have happened before are still in the mind of people, so any cyber attacks, any fraud situations, anything like that. And I think that the way to break through it is both from a regulation side, but also from self-regulation. And I mean, again, what I mentioned earlier, having very robust risk management system where you have your own controls that prevent from fraud, you understand the weak points and you set it up. And then, again, you do not share the fate of many names that have been on the front pages for very bad reasons.
So you're talking about more adoption and more people actually using crypto rails for their payments, right? So there's two kind of angles to come at this from. So one is, of course, it's coming. The superior technology will eventually win out. It might take its time, but right now you see it already, especially in countries where they don't really have stable currencies. In the Western world, we're lucky that we don't have to think so much about whether my credit card with Swiss franc will actually work or whether it's being inflated away at 20, 30, 50%, 100%. And so it's being led from areas of the world where its need is that much more urgent, and you see your salary being inflated away and you need to address it, and therefore you immediately switch to USDC or something similar. But on the flip side, as you talked about the scalability question, I think this is maybe a bit controversial, right? But in Web3, we have a lot of different providers. So you have many of them in this room today, perhaps, but also outside of this room. And so I don't know if I can necessarily foresee, like if I go into any retailer store tomorrow and I can pay by Visa, I can pay by MasterCard, maybe Amex, maybe Diners Club, but that's really as far as it goes. Do you see a future where I'm going to come in and say, hey, I've got USDC on Polygon, can I pay? And they're like, nah, I only accept Solana, sorry, or something like this, right? So what's the future? What are we building towards where we have some level of, not that I want to have centralization to the nth degree, but this is obviously a problem that we're going to see, and I'm interested to see how this plays out.
I would add two things to it. First, we need harmonized regulatory frameworks because in the end, payment is global, right? So we need to have the same playing field for everybody. That's one. And then second, that's up to us. We need to have amazing user experiences to actually make it easy to pay. And what you're saying is actually definitely a problem nowadays. But I think what we see is, let's call it bridges, right? Or automated bridges who will solve this for us rather short term. At least that's my look at it. Thanks.
Thanks, guys. Thanks for being on the panel.